On August 1st, 2012, Knight Capital pushed a routine software update. 45 minutes later, $440 million had been incinerated. The culprit was a piece of dead code, a ghost function called PowerPeg, that had been sleeping in the production system for 8 years. The public story called it a freak glitch. The structural reality is darker. This was the perfectly predictable outcome of a financial machine that has been engineered to move faster than any human override. The foundation of the trap was laid in 2007. That year, Regulation NMS shattered the monopoly of the New York Stock Exchange, fracturing the market into dozens of competing exchanges and dark pools. Firms like Knight Capital adapted by becoming high-frequency market makers. Their entire business model depended on speed, executing millions of orders per day, capturing microscopic spreads, and collecting exchange rebates. This created an arms race in code. Algorithms were layered on top of legacy systems, patched and repatched by teams that turned over constantly. The result was a digital organism that no single engineer fully understood, a tangle of live wires and dormant routines kept alive only because no one dared to touch them. PowerPeg was one such routine. It had been written years earlier as a test function for a now-defunct program. It served no legitimate purpose in the live environment. The engineers knew it was a landmine with a hair trigger. Deleting it would have required time, testing, and a budget approval nobody wanted to fight for, so it stayed, buried, and waiting. The mechanics of the meltdown were a study in annihilation. Knight was deploying a new system called SMARS, designed to replace the old order handling logic. The deployment process was automated, but a technician accidentally skipped one server. 7 machines received the new code. The 8th, the orphan, defaulted to the dead function. PowerPeg woke up. It started buying high and selling low, flipping shares at machine speed with no kill switch and no limit. Within 30 seconds, it had accumulated a $3 million position. Within 45 minutes, it was hemorrhaging over $10 million per minute, moving prices against itself in a self-destructive loop. The firm's capital evaporated before a human being could reach the off switch. The code did not malfunction. It executed precisely the instructions it had been fed with the cold precision of a guillotine blade. The macroeconomic reality check is this: the financial system runs on a patchwork of legacy code, abandoned subroutines, and silent kill switches held together by the assumption that the next update won't flip the wrong bit. The Knight disaster is not a historical footnote. It is a live preview of the next flash crash, the next trillion-dollar valuation error that will sweep through automated markets before a human can react. The system didn't break that day. It revealed its true architecture, a machine optimized for speed, not for survival, where risk is externalized onto the balance sheet of whoever deploys an update on the wrong server. The code is still there, buried across exchanges and clearinghouses, waiting for a single misplaced keystroke to wake it up. The safeguards are an afterthought, and the next glitch is already priced in.